the stock-specific action then. We've got Abhishek joining in. Bajaj. Okay, we'll get to Abhishek in just a bit. He's going to tell us why Bajaj Finance and Kotak Mahindra Bank are higher. But let's get to the stock-specific action then in terms of the big movers. On the way up, it's autos, so Maruti and M&M up. IT names led by Infosys. There are many on the street who believe that Infi might raise the full year revenue guidance for FY25, so 2.5% up move. HCL Tech is pushing higher too. ONGC is up nearly 2%. In the pharma pack, Dr. Reddy's holds up in the green, but Sun Pharma is seeing a bit of profit booking and softness seen in some of these PSUs like NTPC, BEL. They're on the back foot today, and you are seeing cuts of close to about 0.5%. But Abhishek is now with us to tell us why Bajaj Finance and Kotak Mahindra Bank are rising in trade today.
Well, Citi has opened a 90 days positive catalyst both on Kotak Mahindra Bank as well as Bajaj Finance. So on Kotak Mahindra Bank, they have upgraded their recommendation to buy, increase the target price to 2,070 from 1,940 that they had earlier. They said that sustained loan growth momentum and personal loans are seeing improvement with respect to delinquencies, and that is gathering pace over there. So credit cost expectation is already set in the higher side with respect to valuations that's been commanded by the bank. So they say that tweaking medium-term growth momentum with relatively low beta or the impact on stock price, they have revised their target price. So lifting of regulatory restrictions will be the key trigger for Kotak Mahindra Bank. On Bajaj Finance, they have a buy recommendation target price of 8,150 per share. The key trigger for them to open a 90 days positive catalyst watch on Bajaj Finance is that the post credit cost guidance revision in 2Q that they have seen for FY25, they expect a marginal uptick in 3Q credit cost to be around 2.2 to 2.25%, and that initiation has been done by the lender with respect to risk actions by cutting segments and pruning the exposure to riskier part of their portfolio. So despite rising stress and rundown of captive two-wheeler and three-wheeler financing, they expect AUM growth to be around 6% quarter-on-quarter and 27% YOY, which will give support to the business momentum. And with cost of funds peaking out in 2Q, they expect net interest margin to improve further, anywhere between 3 basis point to 5 basis point. So management transition update will be very critical. Their own assessment is that leaning more towards the executive role of Rajiv Jain at Bajaj Finance or Bajaj Group level. Back to you.
Thanks so much, Abhishek. Both Bajaj Finance as well as Kotak Mahindra Bank doing very well in the session today. Well, moving on.